Are home prices about to fall? This is a topic a lot of people are asking about because we're seeing a big increase in mortgage rates and a lot of early signs that home buying demand is decreasing. I actually found a very good article on housingwire.com that I also want to share with you guys today because they break down in detail and also they support this with data regarding are we going to be seeing home prices decrease because we're seeing all these signs that home buying demand is decreasing, and of course we're seeing rising mortgage rates as well. And to be honest with you guys, this article right here kind of changed my thoughts regarding what's necessary or what's needed in order for home prices to decrease. So with that said, let's go ahead and dive right into the video. And of course, if you guys get any value out of this video whatsoever, then please hit the like button. Also, this article here is very lengthy, also includes a lot of data. So I'm going to do my best to share this information with you guys in layman's terms, and also share some more insights based on my experience and also based on my knowledge with the housing market right now. So in any case, here's the article itself. This is again according to housingwire.com. The author of this article is Logan Mohtashami. I think that's how you pronounce his name. Logan is a lead analyst for housingwire.com. And he says here, we're basically at the point of this economic cycle right now where we're basically getting two main questions. Are we going to be seeing a recession, and are home prices about to fall? And he separated his work into two different time frames from 2008 to 2019 and also 2020 through 2024 here. Also in this article here, he breaks down by year the housing crash narrative, what people were saying it's going to be causing a housing market crash over the past 10 years. He actually did a very good job regarding this as well. So here's a short history of the housing crash narrative so we can get some insights about what people were saying over the past 10 years. And then I'm going to be sharing some information with you guys to show you guys what his personal opinions are of what's needed for home prices to fall this year. So before that, let's look at 2012. This is 1 year before I received my real estate license. Shadow inventory will cause prices to fall. And shadow inventory, by the way, here's a good definition on just Googling it. It says shadow inventory are housing units being held off the market by lenders, either in the form of real estate owned properties, those are REOs. Those are basically properties before they become foreclosures, and also in the form of mortgages delinquent for more than X months in which lenders have not foreclosed yet. So in other words, shadow inventory is basically houses that have not hit the market yet, but they're being held by lenders. In any case, what the reality was is that inventory actually broke down or actually decreased in 2012, and the month supply data got below 6 months. Also, the shadow inventory was not an issue as it took years to get rid of the supply from the housing bubble years. So in other words, we didn't see this big increase of shadow inventory, which caused our housing market to crash in 2012. And as you guys can see here in this graphic here, in 2012, our month supply was 5.9 months. The lead up to the Great Bubble or the Great Recession in 2008, from 1999 through 2005, our month supply was in the range of 4.3 to 4.7 months. But as you can see here, the peak here in 2008 was 10.4 months, 2009, 8.8 months. So the levels in 2012 were far below 2007 through 2009. On top of that, as you guys can see here in 2011, the month supply was 8.3 months. So we had a big decrease to 5.9 months in 2012. And therefore, of course, that causes home prices to not fall in 2012 on average. And here's what happened in 2013. And this is also the year I received my real estate license as well and also bought my first house. Here's what they had to say. Because mortgage rates were rising and the Fed was also tapering, the housing market crash was going to be happening here. However, here's the reality. The 10-year yield on the US Treasury note shot up from 1.6% to 3%, which is obviously very similar to what we're seeing this year. As you guys all know, the yield is above 3% at the time of this video, just over 3%. This caused the housing market to cool down, but we had no negative year-over-year price declines as inventory did not even get over 5 months back then. I remember in 2013, we helped a lot of real estate investors buy houses in the greater Sacramento area. We were placing 15 to 20 cash offers every single day on houses, basically from February all the way until June of 2013. In my marketplace, it was absolutely insane. Most home sellers were receiving multiple offers, and it was a very challenging market for people looking to buy a first home, for example. And fast forward to 2014, here's what they had to say. We're going to see a housing market crash because purchase application data, in other words, the number of people submitting applications in order to buy a house, was down 20% year over year. Here's the reality though. Even though sales fell and inventory grew, home prices did not decline. Also, the month supply of houses never even came close to breaking over 6 months. And here's a really good graphic depiction from the National Association of Realtors for total housing inventory ever since 2012. As you guys can see here, total housing inventory has been declining really ever since 2012. But in 2014, we had approximately in the range of 1.7 to approximately 2.25 million houses for sale. Right now, we have about 1 million houses for sale in the US. By the way, though, the National Association of Realtors includes pending home sales in their total housing inventory data. That's why this figure here of 1 million houses for sale or housing supply is about double that of Redfin and Realtor.com's data as well. And here's what happened in 2015. This was going to be the start of the silver tsunami. We're going to be seeing this massive amount of people selling their houses because boomers were going to be downsizing their houses. However, that did not happen, and it still hasn't happened. In 2016, here's what they had to say. Because manufacturing was in a recession and stocks pulled back 15%, people were pushing the general recession premise here. The reality was home prices grew because inventory fell once again. 2017, because home prices were back to the housing bubble peak, prices had to crash. The reality though, inventory fell again and home prices rose again as well. And in 2018, here's what they had to say. With rising mortgage rates rising to 5% by the end of 2018 and the new home sales sector getting hit hard, the housing market is going to be crashing. The reality though, home sales fell, but total housing inventory still did not grow. The month supply data increased, and we also had no inventory growth, and purchase application data were only negative for 3 weeks out of this year. So here's what happened with mortgage rates in 2018. At the beginning of 2018, mortgage rates on average were at 3.95%. When we ended the year in 2018, their average rate was approximately 4.55%, coming off the highs that were set in November at 4.94%. So in other words, back in 2018, because mortgage rates were increasing, a lot of people were saying that we're going to be seeing a housing market crash. And I was a real estate agent, of course, in 2018, and I really remember the housing market really feeling very, very slow. I remember selling a house in November of 2018. It actually took us over 30 days to sell that house, even though we were priced appropriately. So really saw a slowdown in our housing market in 2018 because mortgage rates increased approximately 1 percentage point that year. And in 2019, the housing market is going to be crashing because inventory was up year over year on the month supply data for a few months, and the sales trend was still fading. The reality was that mortgage rates actually fell in 2019, and the housing rebounded in the second half of the year. And you can see this decrease in mortgage rates in 2019 right here. So we basically started the year in 2019 at 4.5%, and we ended the year in 2019 at approximately 3.74%. So what happened in 2019 as well is that home prices actually went negative very briefly in the first half of the year or the first couple of months of 2019. Also, people had more choices for houses for sale because inventory was actually up. Also, days on the market climbed to over 30 days, giving more people more options for houses to buy. And here's a really good graphic to show you guys regarding home prices in 2019 according to Redfin. So the median sold price at the beginning of 2019 was approximately $257,000. Compare that to now, the average home price or the median sold price in the US is $400,000. But as you can see here, that's a 3% gain compared to 1 year ago or from the first half of 2018. And then home prices declined all the way until the mid-February. However, then home prices shot up greatly because, again, as you remember, mortgage rates decreased. That caused more demand for houses in 2019, and we ended the year at a 7% gain year over year for home prices in 2019. And here's what happened in 2020. Obviously, COVID-19 hit us, and thus the housing market crash premise went into overdrive. That was all over the internet, all over YouTube. A lot of people saying that we're going to be seeing a housing market crash because of COVID. In contrast though, here's the video I made back in May of 2020. My most viewed video of all time, 163,000 views. This is a video I made basically stating that we're not going to be seeing home prices decrease because housing supply was so low. In any case, a lot of people were saying that COVID was going to lead to a housing market crash. Of course, that did not happen, and we had the greatest recovery ever. And here's what happened with home prices in 2020. We had a seasonal low in January and February of that year, and then home prices increased until basically mid-April, and then they decreased for basically 1 month. This, of course, is because we had stay-at-home orders in April, causing our housing market to more or less be on pause. But as you guys can see here, of course, home prices increased greatly with stay-at-home orders, a lot of stimulus in the economy, and also the housing market ended with a 13% increase in home prices compared to the first of the year. And fast forward to 2021, there was going to be a housing market crash because of mortgage loan forbearances. Obviously, that did not happen. Data was stable, and most people making over $60,000 a year got their jobs back by October of 2020. So obviously in 2021, we did not have a housing market crash, and home prices increased by 14% in 2021. All right, now that we've talked about the last 10 years, let's talk about the future of our housing market here. So it says here the age group of 28 to 34 years old in the US was the biggest age group ever, and couple that with a lot of move up and move down home buyers and home sellers, and also cash buyers and investor buyers, that caused a lot of housing demand. As you can see here, this age group right here is the age group of 28 to 34 years old, the biggest age group as of April 1st, 2020, according to the US Census Bureau. So what this basically means is that we have problems with inventory as well, because if demand is very, very high, that's going to be causing housing supply to decrease. And total housing inventory has been falling ever since 2014. And it says here, with this increase in home buying demand, we had the potential to break under 1.52 million houses for sale in the early parts of 2020. Historically speaking, though, 2 million to 2.5 million of inventory is normal. That's a key stat there. It's very normal for housing supply to be in the range of 2 to 2.5 million. Right now, though, as you can see here, we have approximately 1 million houses for sale in the US, so far less than historical averages. It also says here in 2020 and of course in 2021, we had a terrible grade of home price growth. In other words, home prices increased too much for a healthy housing market here. Rising home prices was the real housing crisis this time around. A raw shortage of houses for sale created forced bidding wars and of course drove up home prices. And you can see that damage that was done in 2020 through 2021 right here. Home prices absolutely increased greatly. They basically skyrocketed in the second half of 2020 through now. And it goes on to say the following here: even though we're seeing some weaknesses in home buying demand, we haven't seen a significant dynamic shift yet to bring prices down because total inventory data is still very low. So in this article here, they cite housing market trends according to Realtor.com as well as Redfin. However, the data they're sharing is a little bit old. So they're sharing data from May 28th from Realtor.com. I actually want to show you more recent data from these two websites here. Let's first talk about Redfin though. So here's total active listings, which of course is housing supply. Right now we're down approximately 8% compared to 2021, 632 houses for sale. This excludes pending home sales. And compare that to 2021, we had approximately 700,000 houses for sale. And also in 2019, we had approximately 1.2 million houses for sale in the US. Also, according to Realtor.com, for the week ending June 4th, 2022, active listings are actually up 13% for the same week in 2021. But also, as I mentioned in my video from last week regarding this article from Realtor.com, we're still nearly 50% below the total number of houses for sale in the US compared to the onset of this pandemic. So in other words, we have a long ways to go in order to have a more normal housing supply. So if you guys are still watching this video, I really appreciate that because this video is a little bit long. So what is needed right now in order for home prices to fall? It says here, traditionally, people believe you need 6 months of housing supply because that happened during the housing market bubble crash. This is also what I've been saying as well, because historically speaking, we need at least 6 months supply or more than 6 months supply in order to have a buyer's market and not a seller's market. And obviously during the last housing market crash in 2008, there was a forced selling period, and also a lot of people were getting loans with less than stellar credit. So here's a number of consumers with new foreclosures and bankruptcies going back to Q1 of 2003. As you can see here, from 2005 to 2008, this dark line here is foreclosures. Bankruptcies are the red line right here. Foreclosures and bankruptcies were at very elevated levels and basically going up. Compare that to now. Obviously, we have a lack of foreclosures right now because of the federal moratoriums we had in place ever since March of 2020. Obviously, those have since expired, but we're still seeing a very low amount of foreclosures right now, and also bankruptcies as well, especially when you compare that to the run-up of the Great Recession of '08. Another trend we're seeing right now is that people's credit scores are far higher right now compared to 2003, really all the way until 2006. So have a look at this. These are mortgage originations by credit score, and these are in billions of dollars. The blue shaded bars here are for people who are getting mortgages with credit scores of at least 760 or higher. So far higher than the levels we saw in 2003 all the way until 2019. On top of that, look at the number of people getting mortgages of less than a 660 credit score. Look at 2003 through 2007, very elevated levels, especially compared to 2010 all the way until now. And by the way, in order to get the best mortgage rate, you need your FICO score to be in the range of 740 to 760 or more. In any case, what we're seeing right now is far different than '08. I mean, a lot of people getting mortgages right now are well qualified compared to previous years. And also, of course, we're seeing very low foreclosures and bankruptcies right now as well. However, though, what is needed for home prices to come down? It says here, first, we need to get month supply data above 4 months with duration. In other words, we need the month supply to be over 4 months and for that trend to continue over the long run. So right now, our month supply, according to the National Association of Realtors, is 2.2 months. So obviously we have a long ways to go. We're obviously not there yet. But once we get above that, or once we get to 4 months supply, we would have a more normal housing market supply. And here's monthly housing supply ever since 2012. As you can see here, a month supply in the range of 4 months would be more normal from 2016 to 2019. But as you can see here, we're at 2.2 months, a long ways to go before we have some more normalcy in our housing market. And it says here, why should we focus on 4 months instead of, historically speaking, 6 months? Traditionally, inventory levels are between 2 million and 2.5 million. And we basically started the year at 870,000. And they break this down very, very well here. It says, if we had started the year at 2.4 million total housing inventory and home prices and rates rose in 2022, we would have seen a noticeable cooling down similar to what we saw in 2013 to 2014, which would have pushed up the monthly supply over 6 months. So in other words, what we're saying is that at the beginning of 2022, we had 870,000 houses for sale, but if we had 2.4 million houses for sale at the beginning of 2022, we would have a month supply over 6 months. However, though, it says we are far from the total housing inventory data of 2014, let alone the 3 million to 4 million inventory levels after the housing market crash. As you guys can see here, we basically reached or are very close to reaching a 6 month supply in 2014, but we have a long ways to go because we're only at 2 months right now. And it says here, according to this article here, my next stage of watching inventory is getting back into the range of 1.52 to 1.93 million houses for sale and the month supply above 4 months with duration. Once we get to these levels, we will revisit. And it says here to have any significant price declines, we need to see these things occur. So in other words, we need to see the month supply over 4 months and also for total housing inventory to be in the range of 1.5 million to 1.9 million houses for sale. On top of that, he believes that higher mortgage rates can help bring some sanity back into this housing market. So to summarize here, are home prices about to decline? Here are the key stats that need to happen before we start talking about home prices falling according to this article here. It says, of course, monthly supply needs to be over 4 months with duration, and also we need inventory levels in the range of 1.5 to 1.93 million houses for sale. Until that happens, don't look for anything big in terms of price declines, as total inventory and a month's supply of houses are still just too low. So comment below with your biggest takeaways from today's video. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.